Ladies and gentlemen, thanks for joining us. I'm Nils Baranger from ChartGuidance. Today, in partnership with Dukascopy TV, this will be a moment of pure technical analysis. The subject today will be the medium and long-term analysis of the US dollar liquid high-yield debt index. And we have some kind of a warning that is coming within the next few weeks to few months. On the first slide, which is a weekly bar chart of the US dollar liquid high-yield index from the iBox company, we see that regarding the MACD forest, we have a first kind of warning as the MACD has entered negative territory and is reaccelerating to the downside, as it did between 2007 and 2008. On the second slide, which is now a monthly bar chart of that index, we have the monthly pivotal line, which is the green line, which has been passed recently, which is currently tested. We have the overlying momentum oscillators, which have been weakening for some years and are close to the negative territories. We have the underlying momentum oscillators, which have been declining, but not yet close to the negative territory. This is on close monitoring. Should something happen, this will be within the next few weeks to few months, but not after. On the third slide, which is now a quarterly bar chart of the US dollar high-yield debt index, we have the arrow oscillators with a first warning coming from the arrow negative oscillators and some kind of early warning from the arrow positive. Then we have a negative divergence with the RSI oscillators index. On the next slide, something more to watch out, which is the directional and its components. We had the warning signal, the same one we had previously in 2007 and 2001, to be followed by the sell signal. So we had the warning signal with the dip, the last dip, and now we are closely monitoring what could turn to a major sell signal within the next few weeks to few months. On the fifth slide, which is now a monthly bar chart with the oscillators and the MACD, the overlying oscillators are about to enter negative territory as a leading signal, as they did here and here. And we will watch out the MACD, which will confirm the signal when it will cross the zero line. On the final picture, which is a monthly bar chart of that index, we have the slow stochastic oscillators with the first negative divergences that have been observed the same way prior to the previous crashes. So the conclusion is that we move from DEFCON 4 to DEFCON 2 alert level, because within the next few weeks to few months, there is high probability to move to DEFCON 1, as there is a sharp correction awaiting on that index. That was our conclusion. Thanks for following us. That was Nils Baranger from ChartGuidance in partnership with Dukascopy TV. Thank you.